All right, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar, and I'm going to tell you guys, I guess I should probably start the video. Grab my glasses, grab my water, check. It's almost 100 degrees here. I don't know what that is in Celsius, but I think that's probably around 30. Maybe 29, somewhere around that. It's getting hot. I already carry water with me everywhere I go. I mean, it's funny. I'm kind of known for that. I have multiple of these jugs, and I've carried them around for years. These hydro flasks are great. There's a company out of Oregon. It's like a thermos. It's just a thermos, And I've been carrying one for years, and I've got several. They're all dented, and because I'll carry them and then I drop them, and you can see the dents. It doesn't really matter. Anyway, I carry them all year long, everywhere I go. But in the summertime, man, it's like you can't get away or get around it. You just can't. But I want to tell you guys, I'm a little bummed out about price action right now. Now you might be thinking, "Hey Blake, we're seeing some volatility, and we're seeing a little bit of sell-off in equities, so we're getting some volatility." That's great and all, and yes, I'm happy that we're seeing some some downside, some two-way price action, but it's not what I wanted. And if you are unclear of what I wanted to happen, is I wanted to see a blow off top. I really was hoping we would get some blow off top, because my opinion is a blow off top would actually signal a top in the equity markets for a longer period of time, which means that we would see probably some immediate downside, but more importantly, we'd see sideways price action for an extended period of time. So in other words, and I'll just, draw it out for you guys. What I was hoping we would see is a move up like this, a move down like this, and then we would get, throw a number at it. I don't care. Couple years of sideways price action. But I don't think that's what we're going to get now. My fear, and has been and still is, that we're gonna do something like this, and then we're gonna do something like this, and we might sell off a little bit in the summertime, find some support, this late summer, going into fall, like like this. And then I guess I should probably draw this differently. Do something like this, and then go into new highs into the fall. That's really not what I wanted, because that means that volatility is probably still going to stay low. We might get our spikes of volatility. Like, I mean, if the S&P drops down to like 3,900, yeah, I mean, the VIX, which is, firming up, obviously, we'll do something like this, but I'd rather, us do a higher spike and then have elevated volatility, because elevated volatility means more opportunity for you and I. See, as a trader, we want two-way price action, and we want higher volatility. When stocks are grinding higher over time, we get less volatility, less two-way price action. So, and to be honest, I don't even care if I like took the week off and I missed a rally in the S&P to 4,500, and then it came crashing down and I missed the whole move. I'd still be okay with it. because I know we'd have two-way price action for a long time. I'm worried that that's just not going to happen, and that stinks. So anyway, so am I happy we're seeing a little bit of volatility now, and the stock market come under a little bit of pressure? Yes, I am. But am I excited about the longer term prospects of it? I'm not. But maybe something happens. Maybe there's stocks start sliding now, and we're seeing a little bit of risk aversion, and then all of a sudden China invades Taiwan, and next thing you know, you got huge amounts of volatility, and stocks start flying all over the place, and that could obviously happen too. I'm just thinking out loud. If everything stays the same, no black swans, inflation continues to grind higher, central banks start to move the goalposts a little bit as far as when we're going to be thinking about raising rates, and volatility will stay fairly benign, and we might get a little bit of two-way action, but not big volatility. I love it, and I know you guys probably do too. I love it when you take a currency pair like the Euro Aussie or the Sterling Kiwi, and you take those currency pairs, and they have 200 pip trading ranges every day. Those are the best. Those are the best trading sessions, because that's when we can capture 100 pips on a more volatile type of currency pair like that, and you can still trade relatively small pieces and still make some good money. But anyway, that's a hope. But let's talk about where we're at right now. So the S&P is below key support. And I'll tell you, if we close below 4110, I think the risk is that we start sliding towards 4,000. Some of the other things that are taking shape that I think we need to really watch right now are cryptos. And if you look at Bitcoin is sliding down towards support. And you guys know that if we start getting below this 52,000 area, 52.4, that'll open that door back again for like the 47, 48, 48,000 level. And then Bitcoin might be ready to really pull back. Look at the reversal that we're seeing in Ethereum today. Ethereum hit a new all-time high, nice shooting star developing. This is, we hit the 127% extension reverse. I think Ethereum could be set to roll over. You got Dogecoin. Dogecoin looks heavy. Dogecoin looks like it could trade back down towards the 30-cent mark. Look at these. Look at the dollar Mexican peso. Now, you guys are all ForexAnalytix peeps. Dollar Mexican peso, I got long some. I got long some dollar Canadian. I'm looking to actually add dollar Canadian above the highs. I did get stopped out of my Canadian yen. I wouldn't mind reshorting it, but the yen's pretty strong today, so maybe you have to be tonight. As you can see, the Canadian yen's just pushing higher. But look at like the Aussie yen. Aussie yen looks like a I know we pointed out the gravestone doji a couple of days ago. Now it's starting to play out. I am short some Aussie yen. If you're not in the chat room, I shorted some 32 pips ago. So what else? So I had a friend of mine, one of the traders from Gelos that I used to trade with. He emailed me this morning, and he's like, "Hey Blake, what do you think about the Aussie?" He goes, "I was looking for it to go higher, but it looks like we're breaking down. What are you thinking here?" And I said, I sent him an email, and I said, well, here, I'll read it to you. I said, "Hey, Trader X, I would just like to add, I see the same, and I think a lot of people got caught short on the move above 78.50. You guys already know this because you guys have heard me say it. On the move above 78.50, so this resistance right here, because he was asking me, would a move below 77 cents would be pretty bearish? And I'm like, yes, I concur. I said, I think there's a lot less people short now, because I think a lot of people got squeezed out of their shorts thinking, oh, here's the head and shoulder pattern. They were short, got squeezed out, probably got some people like him long, right? Because he could, even though he's not long, he's like, I was looking for higher Aussie dollars. That was his email to me. And I said, I like the Aussie yen short on a false breakout. I said, I've been looking at that the last couple of days and trading on the short side of that. That was my response to him. But this Aussie, the false breakout above those highs, the reversal and the move back below 78.20 is bearish. And as I wrote here in, the basic technical analysis last night, bulls will be watching the 78.10 level support, and a break below could signal a move back to the 77-cent level near term. If you were reading that last night, or you were up early in Europe and you're like, okay, if we break below 78 cents, that's a short. That's been a 70 pip move straight down since then. Now I know a lot of it came in North American trade following the inflation data, but let's face it, inflation looks like it's ticking higher. The Fed will have to acknowledge it. Our jobs don't look as great, but maybe what a lot of these analysts, and like Jim Welsh that I was speaking with macro tides, maybe he's right. That was an anomaly, and we're gonna see the next month's jobs numbers, or May's jobs numbers, through the roof, making up for lost ground because of some seasonal adjustments, and we get a blowout number. And then now the Fed's looking at higher inflation, strong jobs, a strong labor force, and next thing you know, you've got people thinking, well, hell, here comes the Federal Reserve. They're going to have to start tapering sooner rather than later. So let's go back to my thought process here on the Aussie. I don't know if you should really be shorting right into this trend line, but this trend line is pretty important. I think this evening in Asian trade, if somehow I think you get a move back up towards like 78.70, 78.80, that previous support should act as current resistance. That'll probably give you a better risk reward to be on the short side. If you really think we're going to break down, I may be completely wrong. We may just flush through these lows, who knows? But I am short some Aussie yen. I'm going to try to short some Aussie if we can get a bounce. I was also trying to buy some, and this is one thing that makes me a little skeptical about how big of a bounce are we going to get in the Aussie. I had alarms set up here in the Euro Aussie, Pound Aussie, because I was hoping that we'd get a dip back to this breakout point, because I wanted to get long, and it just went straight up, So I feel like I've missed the boat here, and I was just looking for a little bit of a dip to try to get long, and obviously following the CPI data, it's just not happening right now. You take currencies like the Euro Aussie, Pound Aussie, Euro New Zealand, Pound New Zealand. I mean, these could be some pretty big breakouts brewing here. I think we could probably do this. I know that alarm is going to go off, but there we go. But you can see, we have this triangle here. I should probably do this on a 1 hour better. Okay. So anyway, you start looking at some of these pairs, and we're risking some bigger breakouts here, and that would mean a bigger breakdown for like the Aussie dollar and maybe some of the commodity currencies. Like, look at the dollar Canadian. Was this sufficient enough today to do a false breakdown below that 120.70 or 60 support that was the 2017 lows? So brief, right? I mean, this is the double bottom trigger. So we start getting back above like this previous trend line support. So that's going to be like 121.70, 121.80. We get above those levels, we're probably looking for a move back up to 125, 126. I'm targeting 124 right now, but I will not be hesitant to move my limits higher in a complete reversal, especially off of these lows, knowing daily sentiment is as negative as it was. All right, let me address some of your comments and questions. Vlad writes in, hello, Blake, what do you think about the Canadian yen at these levels? Yeah, I mean, you know, I got stopped out of my short. The thing I'm worried about right now is the yen, not so much the Canadian equation of it, it's the yen. Because if yields are rising, which they are, you know, what is that, you know, what does that mean for the yen pairs? Do the yen pairs continue to scream higher? I'm not sure. That's why I think you got to be just a little careful with the Canadian yen. Amanda says, best you work on that tan then. Hey, I was in the pool yesterday. It was a little chilly. It was a little chilly because it was windy. So the way pools work when they're not heated, what I've learned over the years of living in the desert is our pool is closer to the overnight low than it is to the highs during the day. So our evenings here in the desert are still really nice. So and cool, like, you know, not like sweatshirt cool, but, you know, like comfortable. So that means the water's chillier. It's but I'm getting close. It's almost pool time, like all the time. Gavin says, so if we get to the new highs in the year, then we can go back to the daily grinding higher again. Yeah, I think so, unfortunately. Alan said, hey, Blake, with a huge jump in CPI, do you expect the 10-year and yen to break higher? You mean the 10-year yield to break higher and yen to break lower and, you know, yen pairs go higher? Yeah, that's exactly what we were talking about, Alan. And that's what I'm a little concerned with shorting the Canadian yen at these levels. As much as I think the Canadian is reversing. Hugo writes in, hey, Blake, good call yesterday in the dollar Swiss levels. Thank you so much. Looks like it could go much higher from here. What do you think? My opinion on the dollar Swiss, and I haven't spent a lot of time on it, we are back at the 200-day moving average. So I think a close above the 200-day moving average. Actually, let me just rephrase this completely. I think a move above 91 cents, because this high right here is what, 93. So a close above 91 cents, that'd be pretty bullish. People got all short, you know, blah, blah, blah. I think it could squeeze. Is Amira here? Because I got to ask you about yesterday. Amira, you here? Did you short the IWM? No. Man, after our long conversation yesterday, all we did is we went to the underside of the trend line, talked about selling it in this area, stop here, limit here. Yeah. Amir said, no, we are at war. So yeah, I understand. Okay. I'm out. I want to thank you all for your support all the time. You guys are awesome. Also, I got to ask you a favor. If you watch our videos on YouTube, make sure you give us a thumbs up. And even, especially the European crossovers, there's, it's so sad. There's actually a competitor. As soon as our videos come out, they give us a thumbs down. They try to disrupt the YouTube algorithms by doing that. It's like, you're super childish. B, I feel very bad for you as a person, for that person that actually does that every day. So if you're watching us on YouTube and you see our videos, please just always give us a thumbs up. I appreciate that. I really would. Alex says, thank you very much for your knowledge and transfer. Always learn something on a daily basis. You're welcome. And Amir asks, can you send a link to YouTube? Yeah, our YouTube channel is right here. You can go to webinars. Well, here, I'll just go over to past interviews. Let's go to videos, and I'll pull up one and then go like this, and then click over to ForexAnalytix YouTube channel. And let me click on that and then do it right here. Boom. And there's the link. So you got it. All right. It's in our chat, in the chat box. So thank you guys. You guys are awesome. Appreciate the support all the time. Have a great one. See you later.